Hello, everyone, and welcome to this special interview session on the Africa Reports. I am Boason Omofaye, and of course, the Africa Reports magazine has floated a new survey report published in that international news magazine covering Africa, reporting on what it calls the 300 African champions in the world of finance, with certain regions, Nigeria and West Africa, Kenya, South Africa, and Morocco leading the survey. Now, talking to me right from Nairobi, where some of the winning financial institutions are coming from, is Kanika Saigal. She's the business and economics editor based in Nairobi. Great to see you, Kanika.
Hi, Boason. Thank you for having me.
Great. Thank you so much for speaking with us on this report. Give me a sense of this survey. Why did the Africa Report decide to do this survey highlighting the 300 prominent financial institutions across Africa? Sometimes, for some folks may just think, are you sure they have up to 300 over there on the continent? This is surprising.
So I think it's a survey that we've been running for about 20 years now as part of Jeune Afrique Media Group. And the origins of the survey mainly looked at asset size. So it's about, how large some of these financial institutions were on the continent. And over time, we've obviously included a lot more granularity in that survey as we're able to access a lot more data now as well. So we looked at around 40 different points, data points, and the 4 different categories, including, I think, solvency, liquidity, and there were 2 others as well. And we combine all of that information together to put together the ranking. And I think it's like no other ranking that you get because of the minutiae of detail that you're able to access looking at that. And I think one thing that is important to note, however, is that obviously, doing something Pan-African, you really need to understand that there's a lot of nuance and differences on the country, on the countries, on the ground, and then within these financial institutions. So while we're trying to put together a ranking of, the top 300 in Africa, having an understanding of those differences is really important as well.
Mm. Very interesting, Kanika. I subscribe to the Africa Report. When I saw that Nigerian banks, a couple of them were leading the top of the table, and I said, hold on a second. We just had a very brutal year, 2023, in terms of a change of politics, as it were, change of governance at the top. We've gone through, and we're still going through the fallout of exchange rate unification, the removal of fuel subsidy and all of those reforms, and keep throwing everything in the fire, as it were. But here are some of the biggest Nigerian banks coming out shining like a gold out of the furnace. How did this come about? Talk to me more about it.
Yeah. So I think what you need to understand is that Nigerian banks are used to, some of the inconsistencies, the political and economic risk that you get in Nigeria, combined with the fluctuations in the naira, the retrenchment of international companies from Nigeria. They understand that, I think, working in Nigeria is quite a risky place. And that is reflected in the way that they bank. So I think a lot of Nigerian banks, they focus on the top tier clients, the well capitalized, well run corporates. And I think that's reflected in their financials. So they had generally low NPL ratios, for instance. I think their loan to book ratio is pretty solid as well. But what that means is that they're not really financing the broader economy. So while you mention all of this turbulence within Nigeria, within the economic landscape, the political landscape, it's not necessarily reflected so much in what the banks are doing because they are quite risk averse and they're focusing on a portion of the clients that are relatively stable throughout time.
Very interesting. But again, let's move a little bit to the Eastern African corridor where you are and a little bit of Central Africa. When you look at the big names such as the KCB Group, Equity Group, the INM making massive inroads outside the traditional Eastern African corridor, going into the Central Africa, the DR Congo, for example, making a big splash over there. Then a couple of Nigerian banks coming in and making some inroads into the Kenyan banking sector, financial services industry as well. Talk to me about the Kenyan banking space, despite also some turbulence that Kenya had also seen over the past year in terms of the state of the economy, debt from multilateral, bilateral institutions, some exit from the stock market because of exchange rate and FX situation. How did the banks really fare over there, coming out shining as well in your report survey?
So I think the difference in particular between the Nigerian banks and the Kenyan banks, and this is a very general point, because obviously, like I was saying, you really need to dig down into the granular detail of the banks and the environments they're working in. But one of the main differences is the Kenyan banks are a lot more diversified. So they do focus a lot more on SME, retail banking, as well as corporate finance and the like. And I think because of that, so they've not maybe performed as well as the Nigerian banks in our ranking, but they're still doing relatively well. And so you can see some of that difference in things like the NPL ratio, which I think in Kenya is slightly higher, but that's because they're willing to take a little bit more risk. And that is reflected in the fact that they appear to finance and support the economy more broadly. And I think because of that risk profile and I guess the opportunities that you see in East Africa, there is a lot more regional competition and regional penetration of, KCB, for instance, an equity bank, they're looking to expand across the region. And I think they're both as well. And same with maybe international companies are looking to see what's going to happen with Ethiopia coming up soon, if there's a bit more financial liberalization there. Yeah. So I think that's what's behind the differences with the Kenyan banks.
Great. For South Africa, just to touch on North, East, West, and South briefly in this conversation, Kanika, in terms of South Africa, of course, these are where some of the biggest banks in Africa are located. First Rand, for example, in South Africa, but big footprints into Kenya and Eastern African corridor as well. You've had Net Bank and a few other Standard Bank and Standard Chartered and the rest of them. How do Southern African banks, big financial services, performed in this latest 300 ranking?
So I think, as you can see, compared to our ranking last year, they've moved quite far down. In the 28 banks that we look at, the consolidated banking groups that we look at, the South African banks have come down the ranking slightly. And I don't think this is because they're not performing well. It's just because the other banks, looking at the criteria that we do, are doing better. So, the South African banks, they are still performing well. It's just the comparison. So, but there are some kind of metrics where things are slightly different. So I think when you look at profitability, for instance, which is one of the criteria, one of the 4 pillars that we look at, they're not doing as well. So the return on equity and operating efficiency, I think it's slightly down compared to last year. So the return on equity, for instance, for the South African banks is 16% this year, end 2023, compared to 19% for the whole of the consolidated banking groups that we look at. But, actually for the Nigerian banks there, when it comes to return on equity, we're seeing something around 30%, which is huge, so that is going to push them higher up the rankings compared to the South African banks. So I think, again, it's a lot about the nuances and what's going on. I think what will be interesting to see is how the ranking evolves next year. Given, we've had a big election in South Africa, I'm wondering if there's any kind of political dividend that will play out within our rankings and the banking sector in our 2025 results.
Yeah, to sum it up, in North Africa and looking at Morocco, and it looks like when you talk about banking, financial services in North African corridor, Morocco looks like the number one destination. Does that show up in this report?
I think what you see is that the opportunity that is being made evident from kind of the retrenchment of some of the international banks in Francophone Africa. So if you think about kind of SocGen and BNP Paribas, that may be potentially pulling out of the continent, you're seeing the North African banks take advantage of that. And I think Morocco, because of obviously the language and the fact that they do have some big banking champions there, like Ati Jerry Wafa, for instance, they're the ones that are able to kind of, take advantage of some of that.
Correct.
Some of the bigger trends that we're seeing. And I think that's playing out in the results as well.
Yeah, that's really interesting. Again, when each time I look and report on myself on Moroccan banks, I see the footprints and the signature of the international banks, as you mentioned, and some very big banks, but a very strong presence across the North African corridor, Morocco, Algeria, Tunisia, making a lot of big splash. Then you got some big deals that I also saw this year with SocGen and some of the big banking financial services there. But very interesting, your reports, as it were. Thank you so much, Kanika Saigal, for these brief interview charts on your 300 African champions ranking by the Africa Report. Great job you're doing on the ground there in Nairobi. Asante Sana, thank you very much for this interview chat on Frontier Africa Report. We appreciate it. And to all our viewers, thank you very much for watching. This is your Frontier Africa Report special interview.